Welcome to StockOdds Odds and End podcast. I'm Dave Singh with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Hey, not too bad. How's your weekend going?
It's a late night Saturday night here, right? We have nothing better to do.
Well, you had a pretty busy week. You were out partying with the family a few times, I noticed. So
Yeah.
when I'm like, Dave, I need you, Dave. So yeah. Anyway, we've been having an interesting month. It's been a little bit down. So we'll go through some of these numbers here. Performance. So, well, let's just rattle off the performance for the year to date, because that's what kind of people focus on rather than the whole, like one full year from this point, but just the year to date. The Dow is down 9.45%. Reason it seems like it's probably down more, but we had that massive October. So the half year performance, is 10.13%. So it really took a dent out of that down market, right? The SPY, not quite as lucky. It's down 19.3 year to date. Its half year performance is 4.76. And we've got the Russell down 21.61. Half year performance 5.56. We've got the Qs down 30.83. And actually 31.07. Yeah, 31%. So that's what the Qs are at right now. So it's huge damage to the Qs, and it hasn't even turned green in the half year. It's still down just slightly, 0.16%. So I think it's been trying. I mean, on Friday, it actually did fill the gap on expiration, and it rallied through the previous close slightly, and then turned and went back down again. So it's interesting, right? So I'll get back to that. Why don't you rattle off a few of the economic reports that are coming this week, and anything on the earnings horizon. Can you do that?
Yeah, we're still in mid-month seasonality all the way until Tuesday, because it's the 9th through 14th business day of the month. So we're still in that soft, because the almanac had us down for the mid-month, and we're still in the midst of that. But in terms of economic calendar, things coming up this week, on Monday, we have the Home Builders Index report. And on Tuesday, we have building permits and housing starts. And Wednesday, existing home sales. So a lot of themes around housing first couple days of the week. And then on Thursday, initial jobless claims and index of leading economic indicators. And on Friday, there's the core PCE price index, disposable income, consumer sentiment, new home sales. So we're going to get some information this week on how housing is doing, how employment is doing, and consumer sentiment, which has been down a lot this year. So that's that. And then in terms of individual earnings, there's still a smattering coming through. Monday, there's one, Heitco, which is aerospace defense. And Tuesday, we have Nike and General Mills, some big companies there. Wednesday, we have Micron and Rite Aid, Cintas. Thursday, CarMax, Carvana, Paychex, and Friday, nothing. So there's still earnings trickling out in the background there, and nothing major like last week when we had Powell and the Fed announcements. But there is some stuff to give us color as to how the consumer's doing, the housing market's doing, and jobless claims. That's that part. And we still are in that mid-month range now, but there is something to look forward to. The last 5 days tend to be bullish, 0.47%. That's going to come back next week. So we'll get back to that next week. But we still could experience some softness because of the mid-month seasonality.
Well, the last week of the month is also, and the first 2 days of the new month is also the official Santa Claus rally. I think the media likes to kind of right around Black Friday or afterwards, they kind of
Mhm.
start bantering about, the Santa Claus rally is because Santa Claus is on the horizon. I mean, don't you dislike going to the mall in October already and seeing Christmas decorations even
It's
before
August.
Halloween even comes around? I don't like that. But then everybody's trying to sell the most and run ahead of somebody else, and it just gets annoying. So then the media starts like the Santa Claus rally way too soon. The official Santa Claus rally is supposed to be the last 5 trading days of December and the first 2 of the new month in January. So, it's similar to what we see. We have a lot of months of the year that have a good seasonality at the end of the month and the beginning of the new month, the turn of the month effect. So it's just, it's labeled something that is, it happens on other months too, but we don't call that the Santa Claus rally.
Yeah.
So, but there is a tendency. It's been accurate, of all Decembers more than 75% of the time since 1950. So that's pretty high odds of having a reasonable time of it. Now the question I have for you, Dave, is we're seeing a lot of layoffs, right? I mean, the Fed's cranking up interest rates so that companies kind of tighten the screws a bit and do lay off. We've seen a lot, and it's always kind of concerning before Christmas and before the holidays to see that. It's kind of heartbreaking, but I know people, it doesn't make it very fun, for a family time and Christmas time. So, but it's part of tackling inflation, I guess.
Mhm.
So,
Well, I mean,
are there holiday bonuses this year? Because sometimes the Santa Claus rally might be, from people getting the extra bonuses and putting it into the stock market.
mhm. Well, like Mega Cap started laying people off a few months ago, right? The Googles and whatnot. And recently, we see a lot of the banks doing it, like Goldman this week announced some layoffs as well.
Eight
But maybe that
percent
could be a,
projected for 2023, right? 8% of their staff.
but this desire to not lose employees, maybe it's going to be a surprise to the other side where employers are going to want to give bonuses to keep the employees from going elsewhere because they're more
Yeah,
concerned about
okay.
losing employees. So that could be a surprise rather than the assumption that everyone's tightening the belts.
Yes, but under these conditions that we're in, are they going to take that bonus and are they going to put it into the stock market, or are they going to use it for other things like pay down bills or, you know, maybe save it for a rainy day, right?
Yeah, I
Uh,
don't going back into the market with the same exuberance it did during the pandemic.
I mean, we have real issues in the sense of the consumer, tightening up and choosing to spend slightly differently than they did before. I mean, I can talk to many people, even if they're, upper or middle class to upper class, they still have changed a few of their habits.
Mm-hmm.
And, saving money is part of it. So the other thing is every time you seem to deploy money in the good growth stocks and the tech stocks this year, you get spanked for doing it, right?
Yeah.
I mean, who bought the December 13th gap up, I wonder? They got spanked. We're
Mm-hmm.
we're down pretty good since then.
And the retail favorites like Apple, look at Tesla. Tesla's getting killed. So, I mean, all the retail people that were gung ho on that are not feeling like they're going to put their new
Yeah,
bonus
I
right.
mean, we have to look at these crowded trades. Hey, I'm going to test your skill here. Okay,
Uh-huh.
I'm going to rattle off some symbols and see if you can tell me which one of the symbols is up for the month. So we've got Apple, Microsoft, Google. We've got Amazon, Nvidia, Tesla. You already know is not doing well.
Yeah.
And Meta. Which one of those is up for the month? Quick, quick, quick.
Well, I already know it's Meta, which is a counterintuitive.
Oh, you already know, you sneaky guy. Okay. So Meta is up 3% for the week and up 5.48% for the month. Whereas Tesla's down 16% for the week, 19.63% for the month so far.
Huge.
The month's not even over yet. So definitely getting hammered there. So Meta, Meta previously got hammered and is bouncing back for some reason. I guess maybe Trump's NFTs have something to do with it. Maybe the metaverse is real and NFTs are real. I mean, Trump sold out, right?
But look at Apple, minus 9.6% for the month. That's like the retail stock of all stocks, right? So it's not.
Well, these are all very crowded trades, and I think that if you look at what is Apple year to date, 24.25% down. Okay, now why wouldn't you sell it and take a tax loss this year against all your other income? And buy it back in January after the 30-day wash rule.
Yeah.
So, could that happen? Then we see a good January rally, January effect. Yeah, and we've got earnings. I think the banks publish earnings on the 13th of January, if I remember correctly. So, it is a bit of a concern. So, I mean, we've got a real issue with tax loss selling here. And we have a lot of economic indicators that are not creating the best of sentiment. I mean, they're really showing that there is serious problems, and we've really had this, kind of balloon bubble type thing pop, as I've seen many times over since I started trading. And the free money has kind of disappeared for a while. It might come back, down the road somewhere. But going into 2023, I don't think there's a lot of free money slopping around to create any new bubble or anything. So if there is a bounce in January, it might be just because of the tax loss selling. The people do want to get back into their positions, right?
Mm-hmm.
All very exciting. Hey, we rattled off the diamonds, SPY, IW, and Qs, but this is where we are with large cap. So large cap is down 14.5% year to date. Mega cap is down 24.9% year to date. And the slope right now is down because it was at a high right at the beginning of December, like right after that November rally there, right? Mm-hmm. We started sliding. So both of those have been sliding since December the 1st. Micro is down 36%, but it's kind of flatlined since October. It hasn't made any more new lows since October. Was actually end of September was the low for micro cap. Mm-hmm. Mid cap is down 19.9%, and it had its low also at the end of September. And it's doing pretty well. Mid caps are doing pretty well. So that brings me to a point. You got the SPY, right, which is heavily weighted in the FANG still, and we know that large cap and mega cap hasn't been doing so good, right? But can you tell me the symbol that is the equal weighted SPY? What is the version of the equal weighted SPY? Do you remember? Skill testing question.
Yeah, it's not. There's the IVE, and those are the.
Nope. It's an equal weight. Does it do a lot of volume? Well, its average volume is 3.27 million a day. It is RSP. Now, the thing with RSP is, because it's an equal weight, it actually favors the spectrum of mid caps. So if mid caps are only down 19.9% for the year, where the mega is down 24.9%, and the mega has putting too much pressure on the SPY, then an interesting utility, an interesting hedge here is the RSP. I want you to look into it some more, okay? So the mid cap's only down 19.9. Now nano is down 44.3. Just got smoked, but it's sitting right on its lows from October or end of September, beginning of October. I think it just made a new low, nano, but it's been pretty sideways since then. And small caps also had a low at the end of September and bounced up, and the recent high was mid-November, and it's been trailing off, but it's down 26% for the year.
Mm-hmm.
So that's the breakdown of, sort of the capitalization. Because when we just say SPY or, diamonds or whatever, it's a little hard to get your head around what stocks are doing what. So that breaks it down a little bit better.
Interesting, the RSP.
Yes. Skill testing question for you. All right. What else do we got on the docket here?
Just levels on the spider. I mean, there's so much talk, like in the talking heads. We could retest 3,200 on the spider on the S&P, but then we've got these bulls saying 4,400, 4,800 by early next year. So we're kind of in the middle of those two extreme viewpoints.
Yeah, well, I mean, what that does is it creates a good back and forth market. I mean, I think investors do have to wake up to the fact that we may have a lost decade here and not regain, the highs that we had previously for possibly 10 years.
The roaring
we could
20s
have a lot
the
of
boring 20s.
We could have a lot of sideways action. We could have a lot of couple days up, couple days down. It's going to be good for trading. And I think that if I was to say what's some good advice to investors, and I think you have to actually shorten your time frame. Everybody says you have to, lengthen your time frame. I don't think we're in that same world anymore. I think we're in the shorten your time frame, be more, of a manager. I was going to look up, some of the big sort of brands in terms of, mutual funds and hedge funds. I'm just going to see where everybody's at so far this year and see how they're doing against the SPY.
Uh-huh.
How they're doing against the diamonds, how they're doing against the Qs, just to see, right? Just kind of check out that, because that'll tell you, if a person can just put money into the ETF that represents their favorite market and do better than those guys, well, then what's the point of having all those money managers? Just go buy the index, right? So, why pay them fees for doing what?
Owning Apple.
Making you less money than the index? I amuse myself. Anyway. Did you rattle off earnings? I forget.
We did that already.
Okay. I was busy thinking about something. Coming up with tricks for you. Okay, what about some of the ETFs that you think might still have some follow through here from last week? Like where would you put your money? Because we had mid-month seasonality still playing out. Are you favoring, say, gold over discretionary still? Like not gold, but basic materials over discretionary?
No, if we're still in mid-month, things like biotech are still a little bit more bullish than other things. The SOCs, which are chips, shorter things like gold and oil and the commodities. So that was the theme for mid-month seasonality. But if we kind of between that and the last 5 days thing, and the last 5 days is more bullish. Gold, silver with the best performance. GLD, GDX, SLV, those are big. And then shorter things like the ARC funds. So really risk on tech stuff, as well as oil, XOP, XLE, and financials. So that kind of in between mid-month seasonality and those final days. So it could be more of a dump the high risk stuff and dump oil and go longer gold and
Well, I mean, if at the end of the month, the last 5 days is typically bad for, the ARC group of funds,
Mhm.
and and they're already continuing to do bad this week. It's not going to be a good year.
No.
So not going to be a good year for Kathy
I don't-
Woods and her
yeah,
team.
down huge.
I mean, there is some interesting, stocks within those ETFs that, like, if I was to approach it, I think I'd like look at each one for, what's the best in a class, I guess, and then short you can either buy the SARC or you can short the actual ETF. So you kind of make your own little basket trade out of it, just within what's represented there, because that team's doing amazing research. It just, these are long time frame type stocks. They're not going to pay off right away, and then of course when you have things in there like Tesla that have its own set of problems, it's that pulls you down. Anyway, let's run through the numbers on IWM and just like the different levels here. I'll start with the diamonds actually.
Uh-huh.
Oh, and I was going to mention too that I'm fully expecting that that we're going to see more problems related to crypto because of the increasing regulation that's likely to happen on the back of what happened with FTX. And so that can cause, sort of less enthusiasm for the crypto anyway. And then you have a lot more, I guess, a lot more outflows and redemptions and different funds and things that are related to it. There's a lot going on that just tells me that the appetite might be, in some of the NFTs and things like that, like we've seen with the Trump thing. But as far as, I'm really concerned about like Binance and Tether, just because their audits, are not as solid as what you see with traditional finance and traditional companies in terms of audits, right? So I think there's something to be desired there, and it wouldn't surprise me at all if the next big shoe to drop is in that area. So if you're in, people listening, if you're in crypto, you got to do your homework, but we've got some serious problems brewing. I think the tip of the iceberg was just the FTX. It's not done yet by any stretch of the imagination. So, okay. Diamonds. So diamonds on the daily, they popped down and they broke their 5-day low, their 10-day low. They did break the 10-day high, the monthly high on that CPI on December 13th. So, but it reversed, right? And so that doesn't bode well for things when you see that kind of action. You can go back and you can look at the same thing that happened in April. We popped up and then we reversed, and then the next day we went down, and then it just continued to go down all the way through May until we got that low on May the 20th. Right? So I'm suspecting that since we're already sliding down the Bollinger Bands and now we're at the 200-day moving average, are we not? Or is that, no, we're not quite, yeah, it's a little bit lower. So we're at the 50-day moving average right now, sitting just above that, and the 200 is just below. So if we break the 50 and we break the 200, we could be sliding down further. There's quite a ways to go. So that projections like for the SPY for 3,100, 3,200, I could see that happening if we continue to go down, which would probably erase this Santa Claus rally right?
Mm-hmm.
It's going to get it out of its system. So diamonds, yeah, and I think the next support level on the diamonds to me is the. Here, let's grab this number here. That's 317.18, and it's at 327. So we've got 11 points to go.
Mm-hmm.
Okay. Let's take a look at SPY here. So diamonds are price weighted. You know, you're talking about your blue chips, things like that. You got a lot of defensive names in there, and it's still weak right now too. So I think there's some tax loss selling going on there as well. SPY. So we're sitting at 383. We've got our next number, I believe, to focus on would be 368.79. So we're about 15 points away. Definitely sliding. Now it's below the 50-day moving average as we speak. And it's obviously below the 200. The 200 is quite a bit above it. So it's below the 200. It's below the 20. And now it's below the 50 as well. Happened on Friday. It broke it. Okay, Qs. Qs, we're just starting to slide down the lower Bollinger Band because it had plunged into it on Thursday. Friday it started sliding. And again, it's below the 200, it's below the 20, and it's now also below the 50. Mm-hmm. Its next support number is going to be in around 259.08. So just think around the 260 number is a good target. And we're at 274, so you've got about 14 to 15 points of movement there. IWM is interesting to me because it was the only one that performed like it did with a up day on Friday. Mm-hmm. Not up in relationship to the close of the previous day, but what I mean is from open to close, it was up slightly, like 0.33%. So that's interesting to me because that might mean that there is a little bit of an appetite for the small caps next week. I don't know. Can you recall mid-month seasonality in IWM? Was there any green shoots there?
For mid-month, IWM is supposed to do a little bit better, like plus 0.08% up versus minus 0.48% for the spider.
Okay, so well, it's actually trying to do that, right? So that's interesting. The baskets that we did on Friday relative to the small caps did pretty well. So I think maybe some of the tax loss selling is kind of done, and it's also not as big of a deal because I think what I see is it's rolled into the mega caps and the the large caps. It's like those ones are more crowded trades anyway. Mm-hmm. And I think that large investors are saying, well, we'll just sell it now, take the loss, and we'll buy it back in the new year. So I think the small caps would get my favor this coming week here.
Interesting.
But you can see the chart. You can see that it did have an up open to close session where all the other ones were down. And it's also, the stocks performed really well on expiration. And I look for a change from expiration for the following week. So I would vote a little bit more for IWM over the other ones. Now if it fails, let's just look at our support level. I think in focus would be the 168.19. So we're only 5 or 6 points away from that, maybe 6 points away from that. So not that big of a move. So I mean, it could, it could be there in 5 days, or it might just do, and it might still be there in 5 days, but it might do better. It might have alpha over the other market ETFs. Okay, so anyway, hope that helps. We got some planning to do, and I think it'll be a good, productive week. It might be a little bit light on Friday as people head out for the weekend, because Christmas is on a Sunday, right? And also watch Monday. Monday, there are some countries that don't have any trading activity, and also people are just generally going to take a longer weekend. So although the markets are open on Monday, it might be very light volume.
I thought the 26th is closed. No, to celebrate for Christmas.
I don't know. Check it out. I don't think so, but you could be right. Waiting.
I could have sworn I looked it up earlier and I saw that it's being celebrated on the 26th, but I think everybody should just go double check that one.
And well, let's just go NYC holidays 2022. Let's check it out.
Yeah.
Here. So Christmas Day is, oh, you're right. So we do have Monday is closed.
Yeah,
so there you go.
Yeah. So it's going to be a shortened week come that last week.
Well, I'm glad you told me. Because the 26th is just always trading for some reason. Well, it is, if Christmas falls in the middle of the week, like on a Wednesday, we trade on the Thursday.
Yeah.
So is it just because it's on a Sunday?
I think it's to get people that 3-day weekend. So it's, if it falls on a Saturday or Sunday,
Well, shiver me timbers. You learn something every day.
I did look that up earlier. I wanted to see, because I thought this past week was the last full 5-day week we had. But actually, the coming week, we have full 5 days, 19th through 23rd.
Well, then, okay. Well, that's interesting then. So then the Santa Claus rally could start right on Friday. And if we have light volume and people are out, you could have a ripping up day just before Christmas. Mm-hmm. I'm glad we talked about this, because that, the last 5 trading days of December actually start on Friday. This is really interesting. So let's really be prepared for that. And if it is, let's press it. And one of the beautiful things is if you can actually open down on Friday, and then it rips all day, light volume. If you let's say you buy a Russell basket, you don't need to overhedge. Like, just let it rip. Like, the difference is even on this last expiration Friday, the basket did 1.5%, the one that we published to the public, right? So 1.5% return in a single day, and that's diversified across a number of sectors. And but if you hedged it, you only did 0.59 to 0.67 depending, right? So it's which is still good. It's still good, but the question is are there times where you can confidently just say, I'm not going to overhedge, and I'm not going to hedge at all? There is. If you walk away from your computer, I wouldn't advise it. But if you're there and you can always lock it on anytime, then fine. All right, with that, we'll be done.
All right, good luck.
Thanks. I'm glad we discussed that. Okay. Have a good week.
Thanks. Goodbye.